Hello, everybody. We're live and in charge for our weekly update. I'm 99% in the new studio outdoors. Reasonably happy with the way it looks. We're live streaming currently on Twitch, which is amazing, and our YouTube channel, of course. We wrapped up our TRIAD earlier. So let's get into our topics today. This, I don't think, will take too long. However, I'm, as always, open for any questions that come up as long as they are answerable and worth answering. So I've got, of course, our state of crypto. And if you've noticed, we are somewhat in a little bit of a run. I can't say it's a sustained run. We don't know where it's going to go. We don't know if it's going to last. We don't know what's really happening. Nobody really can say. What we believe, what I have long believed, is that Q3 feels like the right time for a run. Now, whether or not that happens and whether or not it sustains is what's still unknown. We don't know if these are just temporary fake outs. We do see that there's some international sell-offs happening. We do see that there's a bit of a turmoil effect still happening in the crypto space. Nobody can really say what exactly is happening. Ultimately, everybody kind of agrees, like big bankers and myself, that Q3 feels right for recovery. Now, that doesn't mean that we're going to get to Bitcoin 60K in Q3. It means that it would be the start of kind of this rise back up to levels that are a little bit more sustained, as in resistance points that maintain where we're going upward as opposed to constantly breaching bottom resistance over and over again. And it all, again, hinges around Bitcoin and what it's going to do and what people are doing with their Bitcoin and the miners and what that's looking like. And I know that there were some changes on the mining side. When I say miners, M-I-N-E-R-S, there were some changes on the mining side. They changed the epochs, and that broke a lot of the mining softwares that are out there. I started seeing that supplies started to be a little bit more constrained for graphics cards again, like they were before. They're still available, readily available, and the prices are still reasonable. But I did start to see a little bit more of out of stock than I was accustomed to. Like even just 2 weeks ago, I was seeing graphics cards like the RTX 3060 going for like $450, and they were readily available. You can get it next day. Towers that had that card built into them for like $800. I debated buying one, frankly, and then I pulled back. It's something I'll consider doing simply because Old Yeller, which is the computer I'm using here to do this, and he's not old. I've only had him for 2.5 years. But the point is, a lot of the components are a generation behind. And so I debated getting another graphics card to put in my gaming PC, which is sitting up in the front, set him back to mining now to be a stronger card, take that card, which is a 2060, toss it into this guy to help with the things that I'm doing to stream for you guys. Haven't made a commit decision yet, but that is on deck since I see that the prices are reasonable and I don't know if it's going to last, And so I'm kind of banting in my head, okay, does that make any sense? Or do I just not do it? Or what's the best course action? I have been hesitant to spend money, to be honest, largely because of what's going on in the crypto space. It feels like we should be on the path to recovery, and that's a good thing. So I'm not skeptical that we will recover. Rather, there are other factors playing in that make me nervous personally, where I was hesitant to spend money now, as opposed to, okay, at some point, is this going to just all crap and burn, right? So big picture, we look at what it is that's going on, and with Ethereum in particular. Ethereum is on the climb. However, remember, as of July 27th, I believe it is, we still have the FOMC, and we have to see what they say during the FOMC and whether it's going to completely crap things again, or if they sustain as in, no, we're steady state, or we're going to make these decisions to try to help realign the economy, or what comes out of it. Or is it going to essentially result in the recession everybody anticipates might happen? Hopefully it doesn't. Hopefully we get to where we are consistent and it's sustained. I'm still going to hinge on August. I'm still going to feel like August is the right time for us to have the sustained run as opposed to a temporary pump type run. That's my call, possibly specific to me, but it seems like many of the larger hedge funds and banking institutions feel a very similar way. They've said the same thing, that it feels like August, or Q3 specifically, but August feels like the right time for us to get back on a positive trend, everybody should certainly celebrate this. If I'm you, I would say, looking at the graphs, we should be optimistic, but we should manage hopium. Simply meaning that we shouldn't expect that it's going to sustain. We should expect that it might not sustain. Once we get past July 27th and we see what that looks like, then we can start making some harder decisions about what do we do with our investments. For anybody who's going to ask the questions, I know it'll come up, I'm going to maintain my stance. If I'm talking about investments, I'm going to say stick with the core tokens because they can never steer you wrong. If they go down, which they might, but if they go down, that means you can get more of it. You can stack more of it that you can use to buy into other projects as you choose. Or if they go up, you can then take profits off of them and hopefully recoup any losses that you might have incurred from other projects that you're in. I believe you can never go wrong with those core tokens. It feels like the core tokens are really the key to a strong portfolio. Diverse, certainly, but if they're the foundation of it, right? Whether that's Bitcoin or Ethereum or Binance or AVAX, whatever, but if they're the foundation of your portfolio, you really can't go wrong. You can't fail with those. And I believe in my heart of hearts that it's the right way forward for everybody in the space. And we have to bide some time and just think differently. Meanwhile, there are people out there that are getting tempted off the green candles. They see the green candles and they can't resist. And I'm not telling you not to go into it. I'm not telling you not to take chances. I'm not telling you not to involve that risk. I'm saying that for me, as a recommendation for anybody who would ask, I believe the right answer is to simply stick with the core tokens because they can never steer you wrong. So for those that feel like, everything you say makes sense and maybe that's right answer and maybe it's not, and there's still these uncertainties of, there's these new liquidity mining keeps spinning up and that becomes a thing. And I got something I'm going to show you about that here in a moment. Understand that every cryptocurrency, with the exception of like Everrise and certain others, but largely the 99% of cryptocurrencies, they're all doing the same thing, which is a reaction. They see a thing and they feel like they have to react, and they do based on the reaction, not based on any fundamentals, not based on any strong tokenomics, not based on any logic, just a reaction. We saw this with SafeMoon way back yonder. There was a time when people would spin up a cryptocurrency and largely community would be the reason the cryptocurrency would succeed, SHIB, right? There was a time when tokens would spin up and then reflections became the big thing, right? The Kishus and the Flokis and the whatevers of the world. And then SHIB didn't have the reflections, but it was still successful in what it was doing. And then Saitama comes along, right? And it has reflections, it's got all this stuff. And then the burn mechanic starts to become more of a thing and all these gimmicks start showing up. But what we didn't realize is that all of these crypto projects are doing the same thing. They're doing the gimmicks in response to somebody else doing the gimmick. So I have largely, I watch it, certainly because I cover many of them, but I watch it and I see that everybody's just playing follow the leader. Whereas for me, as a personal investment strategy, I'd rather find the ones that want to stand out in the crowd. They want to change the game, not follow. Why would I want to follow somebody else? I gave the analogy. I don't want to be like Floyd Mayweather. I want to be like the guy that's paying him because that's where the money is. So I wanted to find the originators, the ones who are the first starters. At the same time, though, if you look at something like Titano, which originated the concept of positive rebase, primarily positive rebase, and that, unrealistic APY and everything else, Titano is arguably the worst of the bunch, right? Because it was not a sustainable model in what they created. Others came along and they did a little bit better, but nobody's ever really gotten it to a good point. I then looked at Alto Finance because somebody on YouTube asked me to look at Alto Finance, and Alto Finance is arguably the only one that still has the unrealistic APY. Now, how long they're going to sustain that, nobody really knows. It's just going to be a matter of time. Perhaps when they're going to crash and burn. Or maybe they do thrive, and maybe they do survive, and maybe they do last the long haul. Nobody really knows. We just have to wait. And I think that's the hard thing for people to do is wait projects out. I talked about ETHJets. They started minting their NFTs. There were people on social media claiming it's a scam. I don't know how they can know that for 100% because it just launched the minting of the NFTs. It's not enough time. We don't know yet. We don't really know. I have a pretty good sense based on the conversation and the thought and everything put into it that they have a good process and a good vision of what they wanted to do. I don't see scam. I see that ultimately they're going to have some growing pains. They're going to have some challenges just because it's It's been done before, but not to the degree they're doing it, not the way they're doing it. And certainly it is disruptive, right? That's what makes it appealing. It's something that's truly disruptive, something that's changing the game. And are they able to pull that off? Well, if they are, then you're going to see a bunch of copy afters, right? People that are copying that model. And then are they able to do it better or worse? Or what does that look like? That's what makes this whole space intriguing. Are they able to pull off what they claim they can pull off, or do they just flat out suck and they fail and crash and burn, no pun intended, in what they're doing? So I watch projects like that, and the ones that say we are serious about what we're doing. HODL, that I just did the review on, and the podcast, and speaking with Mr. Roberts, same thing. I watch it. If you're serious about what you're doing, I'll support you. And I watch and I see, are they doing what they're doing? But when we're in the bear period, as a personal investment strategy, I'm focusing on, I shouldn't say stacking, focusing on the core tokens. Because here's the thing. If I knew, let's say later, that ETHs made sense, now I got this stack of Ethereum, let's say, that I could buy the NFTs, and then I'm fine. And nothing was really lost other than, okay, I spent it on this project to watch it grow or not, and whatever. I accepted that risk because perhaps that price point made sense for me at the time. I looked at it and said, oh, okay, at this point, it's only $1,000. I can justify $1,000. It's less about whether or not I'm going to make money off that $1,000 for Ethereum as an example. It's rather, okay, I can justify $1,000 for Ethereum right now in the bear, and I can use it to buy into whatever else I want. It's a paradigm shift, and people I don't think vast majority on YouTube do a good job of that thought and explaining why that is a better strategy in a bear market. Thinking of it rather than the money that you make or don't make, but rather in the gas tokens that you needed anyway to buy into whatever projects that you wanted, and the fact that you can get more of it, which makes you eligible to potentially be a whale in some other project later once things come out of it. It reminds me going back to SHIB, when SHIB first launched, and there were people that just had bought major amounts of the stuff fresh out the gate, having no real reason why they did. They didn't know it was going to succeed. And then they became multimillionaires simply because they believed. Well, the problem is Ethereum was very much more expensive back then. So I wouldn't have done it. Even if I had that risk tolerance, I wouldn't have bought because Ethereum was crap tons expensive. Now, Ethereum is dirt cheap to the point that you could buy 10 ETH at a real good price. And then think about it. If you just did nothing but sat on that 10 ETH until it goes back up to $5,000, man, that's a crazy amount of money. Or use that ETH to buy into whatever other projects, toss 1 ETH per project as it's coming out, and you have to time it, but as it's coming out of the bear period, and now you're a whale fresh out the gate. I mean, to me, that's like changing the game, where you're not worried about a green candle at all. You're worried about, how do I make sure my position is as large as it can be, leveraging the bear period to my advantage as a steep discount. Some people don't believe in cryptocurrency right now because of the bear period, how long it's lasted. And I understand that. That makes perfect sense to me. I'm saying for me, I would rather look at it as an opportunity myself to stack up on the gas tokens, because at the end of the day, you have to make a choice. If you're investing to make money, period, and that's it, to me, what you would most likely do is understand that in a bear market, you're not going to maximize how much money you make. If we accept that in the bear market, you're not going to get as much as you could make, you got a choice. Either you wait it out, meaning sit on it, hodl, you sit on it and just wait. But remember, you're not making money while that's waiting. You might get reflections, but the reflections are losing value because people are dumping off the project. So are the reflections really doing you good? I don't personally think so. Then you get staking rewards. Staking rewards and passive strategies like Libero, for example, yes, that helps make you some money, right? And is it enough money based on your initial investment or your recurrent investment? I'll use Libero as an example because they're the easiest visually. For Libero, in order to get, I would argue, decent amounts of money on a daily basis, you'd have to toss at least $10,000 into any one of their different things. Libero Bank's not going to do it. Liberator Bank's not going to do it. Libero Bank, Libero Bank, or the miner, you'd have to toss at least $10,000 in it to get what I would consider acceptable amounts of daily passives. If you got 10,000 laying around, cool, and you're willing to do that, cool. I would say if you got 10,000 laying around, doesn't it make sense to rather toss 10,000 at Ethereum as an example? It doesn't matter if it's Ethereum or any of the other ones, but toss 10,000 at one of those, let them get their jumps of 200 or 300 per. That's way more money than you would have made in months of sitting on the passives. So then it goes to your tolerance. How long are you willing to wait to start realizing that you got that money? So that's one thing. If you're investing for profit, you can invest in the passive strategy in the bear. I just don't think it makes any sense in the bear because most of the token, if not all of the token projects, have jacked up the mechanics where it could have been a beautiful thing. Instead, they got desperate and they jacked it up and launched another shiny, and then it killed your profit potential. The whole Libra ecosystem, as an example only, had the potential to make pretty much every single one of their different banks could have made you $10 every day, easy with a low amount of initial investment. But because of the printing and other mechanics, it's no longer able to do that. Okay, some people are fine with it as is. You could do the miner. The problem is the miner has other issues. I had a commenter that responded and said, with the fee they take out of it and the cut, it's like 40% of what it should be. Yes, that's because it was not sustainable by their own document. It was not sustainable. They have to pay that somehow. They have to pay people. That's why they don't want you to take the money out. They want you to leave it in there. They say claim after the 7th, but the problem is then you're getting dinged with fees that you don't realize, and they're not obvious. So if that's for some people, maybe that makes sense as a strategy. For passives, that's fine. I think it makes sense in a bull market. I don't think it makes sense in a bear market, is all I said. Everybody has to make up their own opinion. For me, there's the other flip of this, investing for utility. So investing for utility simply means, am I investing in a project because I truly believe in the project rather than just a core profit motivation? As in, I believe in what it's doing. I believe in their mission statement. I believe in the devs. I believe in what they're doing, and I'm investing because I think it's a strong project that has long-term potential, as I believe ETHS is working to try to be, as I believe Everrise certainly is. I believe Ariva is one of those. I think there's tons of these that the utility is what really matters. Terrarium is trying to get to that point, and they're trying to build some of that stuff. I just haven't seen it to a satisfactory level from what I see yet, not for what I would expect to see. Certain other tokens claim to, but then they frankly suck at it, like Paranium. So certain people out there listening might invest because they believe in the project. They believe in the people. They believe in what they're doing. It reminds me of the whole Kishu, right? And other ones that are trying to do things like, world hunger or do something that's really good cause. No problem. I have no issue with that investment strategy. But it also means that in the bear market, there's less money to be able to do those things. So if they were not strong enough in the bull market to build up enough, no, mind you, hardly any of these tokens have gotten anywhere close to the level of holder count that SHIB did. And SHIB doesn't do anything. And I'm going to get to SHIB in a moment. So with these other ones that are trying to do these lofty things, there has to be a lot of money available to do that stuff. Saitama is the same thing. Saitama had very lofty visions of a thing and was never able to execute fully the way that they thought they were. And what they did execute was basically a popcorn fart, to quote Jim Cornette. So are people okay with that? Are they okay with waiting? Are they okay with the possibility that this project is going to be something in 5 years, 10 years? That's an investment strategy. You're investing in the utility, not necessarily the profit potential. However, that means that you take the good with the bad. If it's going to crap because of bad decisions by the development team, that means you either weather the storm or you basically get out, wait till it bottoms out, buy in off the lowest point to get back in at a larger position because you believe in it. So my call to action would be make that decision. Are you doing it because you see profit? Are you doing it because you believe in the project? Sometimes they're different things. Sometimes you can't have it both ways because of incompetent devs, not because of the capacity, but because the devs frankly suck. It's not that they can't do it. They don't want to. They don't believe. Nobody's challenged them to do it. And many of the communities don't force them to do it. They're filled with Jeet type people or the let's go to the boo doo 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 type people. And that noise drowns out the logical voices who are trying to treat it like a serious investment. That's what causes a lot of the disruption that doesn't make any sense because you're filling people's mind with just profit and greed motivation, which makes it harder for serious investors to do what they want to do. Until we get cryptocurrencies that come in and say, we want to be treated as serious and we're not going to allow you to do the LFGs and all that garbage, and you need to act like adults when you come in, we're never going to get out of it. That's my opinion on it. On a side note, I was looking into this whole business of Terra Luna again because I wanted to refresh on where we were and what's going on and what happened. Is there any other information that's known? This is a bigger situation. I think more things start coming out. So In summary, Terra Luna, apparently, there was a lot of FOMO that was happening around this. There was a lot of other organizations. Stable Gains was one of them. Three Arrows Capital was one of them. There's a lot of these other organizations. What they did is they basically FOMO'd off it. They said, this Terra Luna looks pretty good. This UST looks pretty good. And they're just making money hand over fist. So let's just go ahead and invest in that, because why not? Instead of doing more fundamental analysis and more critical analysis and asking key questions to try to understand, as I've said, is it getting unreasonable levels of pump? If it is, that's likely not healthy. This is the reason why. So then this Three Arrows Capital comes up, and Three Arrows Capital was backing liquidity for other different initiatives. Turns out Three Arrows Capital basically just completely is forced to file bankruptcy, and they have to liquidate assets. And turns out a lot of their reserves were around Terra and Luna. Well, recently the founders they just screwed the pooch and ducked it, ran. They got tracked down, finally got tracked down. Now this is of course outside the United States, so it doesn't surprise me, but it is a bit boggling when you have founders of a company who would rather, or even a founder, a government leader, and this has happened multiple times, like Sri Lanka and others. It's like, okay, we caused these things, we made these decisions that caused complete chaos in our country, in our company, whatever. And instead of actually owning it, take it on the chin and say, this is my fault, I'm going to fix it, they'll just duck it and they'll just get on a plane and they'll just leave and disappear and say whatever. So when you get these rug pulls, right, these scams, and then like, car salesman on Seifu, car salesman 2.0 on LockPay, whatever, you get these scam guys who just rug pull and they just duck it and go to something else. It's not exclusive to crypto. They do it outside the crypto world too. So I'm not absolving them. I'm saying that this is a bigger issue. These founders get found, and what they said was, well, we invested in Terra Luna, and part of the problem of why we ran out of the money to be able to pay people is because we didn't think that Luna could go to zero. So essentially, they figured this thing was always going to have money, even though, and probably the logic behind this was that it's a blockchain, it's got the stable coin, it's got all this other liquidity things, the Bitcoin backing, it's got all this that looks good on the surface. The problem is this was never one of the so-called core tokens. Luna is a core token within its blockchain, but it's not a core token in the way I would describe a core token. It was core token in of itself, and that's perfectly fine, no problem. They assumed it could never go to absolute zero. We know that Bitcoin cannot go to absolute zero. It's nigh impossible at this point. We know that Ethereum cannot go to absolute zero. Luna always had the risk of going to absolute zero. Why? Because Luna was always backed by Bitcoin and the availability of Bitcoin and the decisions of other people with respect to it. See, the decisions is the key. In Bitcoin, there's nobody that's deciding for you or to you how your money's being invested. Your Bitcoin is your Bitcoin. If you own it, you own it. It is yours. As long as it's in your wallet, not in an exchange, it's yours. There's nobody in the middle pulling strings on how stuff's done. That was the flaw with a lot of these orgs, is they made the assumption that simply because it's a blockchain, and simply because it's got a stable coin, and simply because it's got a core token of its own, that must absolve it from any of the risk. When reality is, it was just a layer over top of Bitcoin at the end of the day, which created more risk. They just looked at the dollars, a FOMO. They FOMO'd off the green candles and then built this whole investment franchise around that. And then when Terra Luna craps because of Doe rug pull, now these are brought down and investors are harmed. All because, and that's why hopefully people understand when I'm answering questions and I'm telling people, it's like, at the end of the day, I go back to the analogy. Floyd Mayweather, he only looks rich to people that ain't, but think about who's paying him. That's where the money is. The money for these tokens, these projects, is always about these core tokens. I'm not saying that that's all you invest in or they're the only ones worth it. I'm saying that in a bear market, they're still where the money is and where the money's going to come back. Bitcoin, Ethereum, BNB, AVAX, etc. That's where the money's going to be. And to a lesser degree, I would say really it's Bitcoin that's the core of it. However, we know that other ones have use cases that span beyond everything else, like Ethereum with the smart contracts. It's not going anywhere. There's too much out there. It's too late. So this Three Arrows Capital deal, I had a chuckle out of it. The fact that they basically said, well, we didn't think it would go to zero. We didn't think it was possible. This tells me that they didn't do any financial analysis whatsoever. They didn't do any sort of deep root analysis into the financial fundamentals, the money flows, right? The money origins, the money destinations. What's the backing sources? What is the volatility of the backing sources? Because we know that Bitcoin is largely the most volatile asset there is. So if you're backed by Bitcoin, you're already at risk. No, they took a gamble and then they got it wrong when they realized that, oops, we didn't have enough diversity in our backing. We didn't take the time to understand our backing better to make sure that we had multiple different segments of backing liquidity. We just threw all our eggs in one basket and figured it'd be all good. Stable gains was the same thing. Stable gains covered themselves because they said in their terms that nobody reads, you know what, if it goes crap, we're not guaranteed you're getting your money back, and there's not much you can do, and then they're getting sued. So at least they cover their tails. Three Arrows Capital didn't cover their tails, and it took a court forcing bankruptcy for at least to be exposed that these guys didn't have any money to really work with. This is the risk when you leave your money in these places. Celsius is already having more and more stuff come out. Same thing. If you leave your money in these places, because it sounds good, and Celsius was also to some degree backed in this whole Luna Terra business. When you leave your money in these places, that's the risk that you are engendering. And these companies, ultimately, all they're really doing, I don't want to say Ponzi scheme, but it's very close to it. It's certainly a house of cards because they're banking off of something else that was risky and that was iffy at the jump. So if that's what you want to do, that's cool. I'm never going to be a fan of it. And nobody will ever convince me that it's the right answer. Because I think at the end of the day, not your keys, not your coins. I believe in this firmly. And multiple people have said it. Once you get whatever cryptocurrency, make sure it's in your wallet. No, you're not going to make major amounts of money off of it. You're not really supposed to. If there's money you want to try to leverage one of these things, make sure to only put enough in there that you're willing to lose and no more than that. Realizing, no, you're not going to be a millionaire, but you're also going to be kept safe. Or if you're the gambler, we support you and we support your desire to be a gambler, and we're not going to tell you what to do otherwise, because at the end of the day, it's your money. So I'm surprised, but I'm not surprised. This is what my inspiration was, by the way, in why I created the TRIAD, which is my membership plan, because I didn't want to be tied to greed and fiat and all that like everybody else is doing. I wanted to create a structure that's a better community that doesn't have the toxicity associated with the community, where people can talk, and ultimately at the same time, if you give it, you better be ready to take it, because we're not toned down or censored either. And then we can support our community members with a cryptocurrency that is for the community. It ultimately is designed for the community's benefit. So that was the inspiration behind it. If you're curious about that, check cryptotalkradio.net, click Tribe Member in the upper right, and it details the benefits of what that's doing and how we believe that we're different in everything that we're trying to do. And then, of course, the bigger news. I don't know if anybody saw this, but if you didn't know, Elon Musk had purposely invested in Bitcoin on behalf of Tesla. So Tesla had a significant amount of Bitcoin on the books. And what they did was they said, we wanted to have another asset in a diverse portfolio. In their case, Bitcoin was the one they chose. They also have Dogecoin, and I believe they said something else. I think it was Ethereum. But there's these three, and they said, we're only doing these three. We're not doing SHIB. We're not doing any of these other ones. So people don't know. A lot of companies do this. A lot of companies have cryptocurrency on the books as an alternate form of investment. Not because they're trying to be enriched by it, but because of the belief that at some point, these are going to be stable forms of investment. And that at some point, they'll get a return on that investment. So Tesla recently announced they dumped just shy of $1 billion worth of Bitcoin. This is a large sale. Now, it's not unexpected because Tesla's having major issues, financial issues and structural issues and everything else, because I think Elon's just stretched too thin. You can look at him right there. He looks like he's, twice his age. But I think there's a lot of problems in Tesla that cause them to say, let's get this off the books. I called this out in one of my videos, that you also can't bank on the stability of cryptocurrency like we should, because big business has gotten involved. And that's because we've tied it to fiat and we've tied it to greed. And we've said, you know what, it's all money driven. Like you can't even look at cryptocurrency like CoinGecko, right? CoinGecko is its whole interface is around the price of a thing, the fiat price of a thing. CoinMarketCap, the fiat price of a thing. You can list on the scans, but you can't update your data unless they want to know your your pre-sale and ICOs and all this. Everything's fiat driven. Everything is around fiat, not around the true intent of cryptocurrency. So because of what they're doing and liquidity, and because of what they're doing, it basically means it's all these businesses are in. They're in. They got the hooks and things. And largely it's Bitcoin, but there's other tokens that businesses invest in, like Everrise. Everrise has business backing. It has venture capital backing that they've applied for. ETHJets wanted to potentially explore that if they needed to. Other companies have reached out to different cryptocurrencies to get more on the books in a diverse portfolio. So this isn't unusual necessarily, but what it does mean is that as these companies sell off, you're going to see the same disruption that you saw recently on an ongoing basis. That's why I said it's cyclical. Now, there's a couple of ways to perceive it. In large sales like this, dumps like this, they've said that they're going to buy back in at some point. Just right now, this is what we needed to do, and we need to get our cash reserves, and that China basically caused us to be in a situation where we weren't sure about our position and we needed to stabilize. So that was the source. And I believe it was just the easy way to do it. And of course, the investors are happy simply because of the financial disruption that they saw. But on the crypto side, people are not happy because he said specifically, we didn't sell any Dogecoin. He sold that much Bitcoin, but not Dogecoin. Normally, if you had to choose, like Dogecoin would probably be on deck as the better one. But Dogecoin, my guess is he has so much Dogecoin that if he were to have dumped it, it would have probably tanked Doge price irreparably, is my guess. And Bitcoin could take it because there's so much out there. That's my guess. But it does show kind of duplicity, because if he's willing to dump the one, but not the Dogecoin that he has an interest in, okay, now if we were a regulated situation, he'd probably be up in front of a board somewhere, because he's not normally allowed to do that, because he sits on the Dogecoin board. So now, was his decision driven off of him sitting on the board, or was it truly based on what I said, which is that Bitcoin can take it, Dogecoin can't? These are all the reasons why in the SEC and other financial, they want to look for those conflicts of interest in the way that they're doing the trades. In cryptocurrency, we don't really have that. My point is, you have to understand that these big businesses are going to dump, and they're going to buy back in. Because they buy back in later, they're going to buy back in to maintain the position they had before. This means that everything is cyclical. It means that crypto has no choice but to go back up. And a lot of the dumps we saw might be the very same. Actually, I believe it was Q1, I said that it felt like companies were possibly selling off to make the books look good, because it was easy to get rid of cryptocurrency in the short term as a short pump to get everything back on track. If Tesla's one of those companies and it just took them longer to do it, that means that crypto has no choice but to go back up. It also means that anybody that's using this as an advantage, as in a discount, these current bear market pricings, it means whoever did leverage that and they bought in, especially with the core tokens, they're going to make out big, and we're going to have more millionaire stories coming out probably in 2023. That's my guess, if it's true that these companies have done that. And it's an exciting time, even though it's a bear. I think the reason that certain people might be feeling it a little bit more than other people is because in the past, historically, what we've done is we've only looked at those formal candles. We've only looked at these projects that have the short pumps or the green candles in the short term, and we've not looked at the fundamentals. We've not looked at the ones that they're going to stand the test of time. They're just cyclical, and they're built to be cyclical. They're built to handle the bear market. They're built to handle the bull market. We haven't looked at those historically, and I think we should, because by doing so, we're going to get back better, faster, stronger. And that's what I think we should do, to where later the disruption isn't nearly as bad. Because if you look at the stock market, you don't have anywhere near, we certainly had crashes, but nowhere near to the degree that we do in cryptocurrency. And that's because in the stock market, number one, there's regulation. But number two, people are less worried about green candles and more about long term. And there's day trading, right? There's day trading that's kind of expected. And there's less possible disruption that you might see, with the exception of the ones where there's heavy shorting. That's a different problem situation. So my summary thoughts, I think crypto's in a good spot. I think crypto will be in a good spot going forward. I maintain my Q3 position. I'm looking at August as the beginning of a thing, not the end of it, but the beginning of a thing. It's going to take some months before we start seeing the net effect of what's happening now. And we just have to buy some time, be patient, and be smart about your investment strategy. If you're going to invest in the core tokens, invest in the core tokens. If you're not, and you're tempted off the FOMO, the green candles, or the meme tokens, I support you and I support your desire to gamble. I'm not telling you what to do. I'm saying either way you go, we got to just buy some time for everything to recover and get back to square one. And I think we'll get there. And we have to see which token projects were really built to stand the test of time. Because if you're in projects that are telling you just hold, I don't think they have a game plan. If you're into token projects where all they talk about is metaverse, I don't think they have a game plan. The projects that I think are going to sustain are the ones that are building utilities that nobody else, that they're killing it. They're killing it in what they do. Like in Everrise, as an example, they're killing it. And they're doing things that are outside the bubble. They think outside the bubble. They keep their sites up to date. They communicate well, and they're professional in what they do. They don't have toxicity in their communities. Those are the ones that are going to sustain. Everything else is just quick pump. So if you're one of those that's just going to go after the ones that can make you a couple $100 here and there, I support you if that's what you want to go. I make the analogy of chasing pennies in the street. Or you can go after the ones that at some point, no, these are going to be a thing. I believe firmly Luna Classic has that potential to be one of those. When? I don't know. I believe Everrise is going to be one of those. When? I don't know. Everrise excites me though, because Everrise is one of those because it's actually very volatile right now because of how many people are buying it when it dipped. And so then people are taking profits because it's a strong profit potential, but it's reasonably stable. Everrise excites me. Everrise really excites me because if, again, let's say it gets to a penny, which isn't unheard of. It was actually designed to do that at one point. If it gets to a penny, there's going to be a lot of people dumping off of it because they're going to be made millionaires. But I believe it has the strong potential to go beyond a penny. I believe Everrise is one of those tokens that's going to be $1 or more at some point in the future. I just don't know when, but it's one of the most exciting that I can think of. If they keep the same momentum that they've been doing and the same utilities, and everything is tied to burn and everything is tied to the price movement and everything is tied to reinvestments, the swaps and everything else, Everrise excites me. Of every project that's out there, Everrise is the only one that really excites me, that says, these guys are something. All I wanted for them is just to talk to me so I could talk and say, this is great. I want to understand a couple of these things. There's nothing negative I can really say. I would just like to understand a little bit more about some of the things you're doing in the future to try to, get the word out. Because a lot of people don't know about Everrise, and that's a shame. It really is. And then I'm not done in other projects, right? I still have my stuff stuck in the bank in Libero. It's not going to go anywhere. It is what it is. I'm still making money off F Libero, which is weird, but it is as a thing. And then I still have other investments scattered around. So I haven't dropped hardly any of them. Or if I have, it's because I knew that they were trending downward and I knew I could just wait for a bottom and buy back into a larger position. But the projects that I'm in now that I've been confident, my Fave 5, I'm still confident of them just like I was day one. Those are the ones I think that's where you try to get to, is find the strong projects. In closing, real quick update. I talked about liquidity mining earlier at the top of the show. This got called out in one of the news outlets. And basically the thought is that all of this concept of taking and mining liquidity is never sustainable. And that all of the ones that do it, they're doing it temporarily, but ultimately they're going to kill off other benefits. So anybody that has not, and I do recommend that you do, but has not listened to my podcast, cryptotalkradio.net, I covered Crypto.com, the exchange, on the podcast. And I pretty much trashed them because I felt like they were garbage. I've always felt like they were garbage. They got a very nice looking website and very nice looking cards and very nice looking whatever, but I thought they were garbage as an exchange and couldn't frankly think of why anybody would waste their time with them. And unfortunately, Crypto.com is one of those that is marketing, media, hype, with the Crypto.com arena and the other things that they've done a masterful job at marketing and hype. Chillers, right? I'm pretty sure it was wasn't it Crypto.com? I'm pretty sure it was, with the dude from Talented Mr. Ripley, Matt Damon, right? He's walking, he's talking about whatever. They're masterful at shilling. That's Crypto.com. And I felt like they were garbage. I didn't think much of them at all back then, and I trashed them. Well, come to find out, Crypto.com, they had issued these cards, right? And the cards, apparently there was something tied to staking for CRO, the token. And you got staking rewards, and you got this over here and this over here, and everybody jumped on that bandwagon, right? I'm thinking it's crap. I don't understand it. I do, but I'm disappointed, I guess, in people jumping on this bandwagon because I knew it wasn't sustainable and it was garbage, right? So then recently they announced that they're dropping pretty much the staking rewards, and they're dropping some other stuff to basically make it where the card's worthless. And I have Coinbase, and so I have the Coinbase card, and the Coinbase card, you get certain percentages of whatever other token as a rebate. So if I spend, $100 worth of whatever on the card, you get like a 4% back on, this token over here. This one's a 2% and whatever. It's very simple. And they changed it where it used to be, it would stick with one. So it would say, okay, this, you go in and it's 4. Okay, that stays 4, whatever. They changed it to where now every month it changes. I don't hardly use it that much anymore because I don't do all my spending happens from my main checking account, which I know is weird, but my thought was there are tax implications to using that, so I stopped doing it. Well, when Crypto.com does this announcement, they're going to kill off the benefits and they're going to stop doing the staking rewards, and everybody's pissed off and they're talking about dropping Crypto.com, dropping the card. There's a guy picture of his card snipped and all this other stuff. I had a good chuckle. I thought it was good, but mainstream media picked it up and they said this is the same thing as liquidity mining. That's basically what it is. You entice them with all these types of benefits that are not sustainable just to build up whatever. In this case, you want the transaction fees because they get fees off the swipe fees, right? You want to build up all that, and then you take away the benefits when you're done, and you dust it off. Liquidity mining is the same thing. So what Libero is doing with the Libera miner, same thing. BNB miner, same thing. So then the second half of this chuckle, right, is the Binance Smart Chain. They released, there's a tool they have. It's called Red something or other, Red Alert. I posted on social media, on Twitter, cryptotalkradio.net/Twitter. And basically what happened, they have a tool. It's a DApp tool. And what it does is it highlights projects that are on the Binance Smart Chain that look like they're sketchy or risky or whatever else. And what do you know? BNB Miner is on the list. It's not surprising because, again, I think, and for anybody who's in the liberal ecosystem, I'm not. There's no call to action here. I'm not telling you what to do. I'm just telling you, by Libero's own admission, mining was never the right answer. It was never sustainable, and they should have held to that stance. But now all these other ones that are getting into liquidity mining, and a lot of people are jumping on the bandwagon, I think are going to get wrecked at some point in the future. In fact, in Liberos, they even tell you, the money you put in, you're not getting it back. Okay. And if you look at the payouts are only about 10% of what was put in there. So, yeah, I mean, that's fine. But if you think about what that means in terms of true return on investment, if you have to put in $10,000 to get $1,000, that's fine. However, you don't immediately get that $1,000, right? You might get $10 every whatever. Well, think of the ROI. Think of how long it takes for you to get that return. If you're okay with it, no problem. I got no issue with you, and I'm not telling you what to do. I'm saying be thinking about whether that really makes any sense. Long term, big picture. If that strategy makes any sense. Maybe it does for you, but I think the era of liquidity mining and that whole concept of mining and these unrealistic rewards and all that, I think are going to go the way of the dodo. I think they're going to still be offered, but I don't think any of them are going to sustain. And that creates risk because if you're forced to put something in a thing in order to get it, and it's unrealistic in what it's doing, I don't think it's going to last long term. Projects that are just doing staking rewards, generic staking rewards, where you can always withdraw even if there's a penalty, I think those will be fine. I think it's the ones that try to lock your money away and you can't get it back and you're just kind of toast and you get a pittance. And remember that pittance is based on volume. We don't have volume right now. So as I said, many of the mining might make sense in a bull market. They don't really make sense in a bear market, nor does it make sense to originate it in a bear market because you've already possibly disenchanted people, especially if they're coming from some other project, as with Libero. So I hope that they don't jack up the F Libero side, but I know they will. But I hope they don't because F Libero right now is the only thing profitable there. And all these other tokens, I don't think that they're worth the muster in my mind. That's all I got. Now I'll check for any questions that might be there, including our Twitch side. Nope, Looks like there's none on the Twitch side. Twitch is awesome. Again. Let's see. Nope. No questions on Twitch. That's good. Sort of Guten Tags. And looks like no questions on YouTube, from what I can tell. Perfectly awesome. Well, thank you for dialing in. I appreciate it. We'll be back again at the same time next weekend because the time seems to work well for most people. Title is what kind of attracts people, and I understand that. But I'm going to keep doing it because it's fine. No problem. This will be recorded and uploaded. Hopefully it didn't have any issues. YouTube having issues. It said it didn't, but I know sometimes it wants to trip out. If anything comes to you, feel free to leave them in the comments below. And I will get to them as quickly as I can. We do appreciate the comments and questions and suggestions and feedback, anything that you might offer, as long as you come correct to show respect. I will always chime in and respond. On the side note, I'm on record because I'm recorded. I still believe Q3 is when we start coming out of it. And I believe that we're en route to having some good times. Because I think a lot of the ones that dumped out on a major level are going to buy back in at just the same the major level, if not more, because the price will be cheaper than when they initially bought in. So if I'm right, and we do have people that literally stack more bags because they anticipate a higher run, which everybody does, I think it's going to be an exciting time for cryptocurrency. If I'm right, I think it's exciting for cryptocurrency, and anybody who's taking advantage of it in whatever way that you do, you're going to make out pretty good. See ya.